Hi everyone, thank you for tuning in. In this video, I'm going to answer if Palo Alto Networks stock is a buy. I'm going to use my developed, simplified 6-step framework for analysis, so let's get right into it. The first step in my framework considers the customer value proposition, and one thing I look at is revenue growth, and revenues increasing from 396 million in 2013 to 5.5 billion in 2022. This tells me that customers are liking what Palo Alto is selling and they keep coming back for more. It's a cybersecurity company that specializes in firewall appliances and software, and it boasts a net promoter score of 68, which is great if you look at the scale, but it's almost at excellent. Of course, NPS measures customer loyalty, how likely a customer is to come back and recommend the product to somebody else, and you want to see higher scores here if you're an investor. The next step here looks at unit economics, and Palo Alto's gross profit margins averaged 72% in the last decade, remained relatively stable, but it's mostly a software as a service company, so gross profit margin is a little misleading. I like to look deeper under the hood. Operating profit margins remained negative throughout that time, averaging negative 6.2%, and I didn't see much evidence of scale as revenue has grown. That was a bit alarming to me that revenue has grown so much, but they haven't demonstrated any economies in scale, any improvement in operating profit margin. That was a red flag to me there. However, when I looked deeper under the hood, I saw cash flow from operations increasing from 115 million in 2013 all the way up to 1.98 billion in 2022. The major reason for this dichotomy between negative operating profit margins and hugely profitable cash flow from operations is a significant stock-based compensation. The company uses stock options as a way to compensate employees instead of paying them wages. And the secondary thing to look at here is if they're giving stock options, then are they diluting shareholders? And the answer is yes. Yes, they are. I've shown here diluted shares outstanding increased from 206 million in 2013 to 296 million in 2022, and a nearly 50% increase in shares outstanding. So even though they've increased their cash flows by nearly 20x, they've increased their share count by nearly 50%. So the good news there is that cash flow from operations is increasing at a multiple far exceeding the share count dilution. That's good news. The next step in my framework looks at total addressable market, and according to Palo Alto management, its total addressable market is 72 billion, and that's going to be growing at a double-digit compound annual rate for the foreseeable future. Cybersecurity is a significant concern for many of these businesses worldwide, and in my opinion, some of these estimates are understated. I think cybersecurity is going to be an increasingly larger market going forward for a longer period of time. More of our lives are being conducted in the digital space, and that's going to give rise to more cyber theft and cyber crimes, which is going to give rise to the demand for the types of services that Palo Alto provides. The next step in my framework looks at competition, and competition in cybersecurity is not so keenly focused on pricing, but more so on the demonstrated return on investment. How much can you save a company by reducing the risk of an adverse security event? And how can you demonstrate to the company that you've saved them money? Because it's hard to demonstrate to a company, hey, look what I protected you from, because that's something that hasn't happened, right? How can you sell that? Like, hey, look, because you employed our services, you avoided something bad happening. Well, how can you quantify that something bad? Right? So it's a matter of how a business can quantify the return on investment to other enterprises, to governments in selling their services. And looking at Palo Alto's revenue growth, it shows that they're pretty good at demonstrating their return on investment. They're pretty good at convincing enterprises and governments to employ their software. So they've done a relatively good job in the competitive environment so far. The next step in my framework looks at valuation, and for Palo Alto, I use the price to free cash flow, and looking at the price to free cash flow ratio of 20.22, it's near the lower end of its valuation going all the way back to 2014. So the stock is inexpensive according to this metric. And finally, the last step in my framework looks at risks, and enterprises are pausing or slowing capital investment spending as they are losing visibility in their near-term prospects. Many economists are raising the red flags of an oncoming recession and slowing macroeconomic growth. That's caused a lot of companies to pause or slow down their investment spending. So many of the companies that I follow are saying this, that managements across the board are trying to pause or push out these projects, and that could be bad news for Palo Alto Networks. It could start with a pause and slow down. It could start with a pause of these projects, which can end up becoming a cancellation entirely. So this is a risk near term for investors in Palo Alto stock. All right, now that I've looked at each step in my framework, let me give it a grade here, right? Customer value, they get an A plus, almost an excellent NPS score, expanding revenue growth, A plus there. Unit economics, they got a C. They got a low grade from me because revenue is exploding, and yet I didn't see any economies in scale and operating margin, so they get a low score there. Total addressable market, they get a C plus. Uh, uh, a market opportunity less than 100 billion is not very big, but they got a little bit of a bonus because I expect this industry to grow at double digits for a very long time, and so they get a positive there. So it's a nascent industry. It's just now growing. It's got a long way to go. It's going to keep growing for decades, in my opinion. Competition, they got an A. We talked about how good they are at securing business. Risks, they get an A plus because, in my opinion, cybersecurity is a necessity. Businesses cannot hold off on spending on cybersecurity and then have a major risk come out, and then the CEO and CFO are going to get blamed for saying, why did you crimp on spending in cybersecurity, and you exposed your customers, you exposed the business to this massive risk because you wanted to save a little bit of money on cybersecurity. So, in my opinion, there is that risk in the near term that spending could slow down, but ultimately, I believe it will rebound quickly, even if it does, because cybersecurity, in my opinion, is growing to become such a necessity. And finally, valuation, I gave it an A. We saw the price to free cash flow near the lowest level since 2014. All right, so now to answer the question, is Palo Alto Networks stock a buy? Palo Alto stock is a buy right now. The relatively cheap valuation coupled with the very long sustainable industry growth that I expect in the double digits, plus the excellent NPS score and excellent revenue growth, sways me to say the stock is a buy right now. All right, that's all I've got for this video. Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.